Okay, we will going to discuss about paper May-June 2017, paper 11, number 4. Let's start. Elil is a trader dealing in clocks, and clocks is excuse me, okay. Clocks is the inventory. Yeah. And state how inventory should be valued in the financial statements. How inventory should be valued. So we are talking about prudence principle. When it comes to prudence principle and inventory, these rules will always stated. Yeah, this is the rules for inventory. What is the rules for inventory? It is lower of cost and net realizable value. What is the meaning by this? If you have a cost and also have a net realizable value, you have to choose which one is the lowest. Yeah, that's your inventory, the value of inventory. Next, Elil buys clocks for 24 each. Buys clock for 24 each. This indicates that this is a purchasing price. Purchase price is actually equals to cost. Yeah. Next, the following information is available about Elil's business. Elil had inventory of 100 clocks 1 January. Whenever it said the first date of the month, it always represents balance PD. During the year, he bought 2,000 clocks purchases. During the year, he sold 50 at the promotional price of $40 each. All the other sales were made at the selling price of 60 each. Yep. He had inventory of 180 clocks on 31st of December. This will represent as your balance CD. All sales were made on a credit basis. That means every time there is a sales, yeah, sales on credit increase, that will make your trade receivable also increase. Yeah. Next, you are required to calculate the value of Elil's sales for the year ended 31 of December 2017. Okay. First of all, you need to know how much units sold during that year. This formula will be used for anything related to inventory. Yeah. If you have an opening inventory, it will increase if you purchase more, and it will decrease if you sold it, and then it will equal to your closing inventory. So first, if you have an opening inventory, a beginning balance, and then you purchase more, that means it will increasing the opening inventory. And if you sold it, it will decrease the amount available to be sold. And then the remaining amount will be the closing inventory. If you look at the questions number 1, informations number 1, it says that you have an opening inventory for 100, and then you purchase more for 2,000 from number 2, yeah, and then you sold it question mark, and then you have an closing inventory for 180. Now, how much units sold? 100 plus 2,000, simple math, yeah. 180 move to the left. It is equals to, how much is it? 19. Let me count it first. to 100 minus 180, it's 1920 units. Okay, now it said that 50 out of it is sold using the price of $40, and the remaining oops, I don't see the eraser here. Oh, maybe I can erase like that. Okay. Did it? Oh, okay, I cannot delete. So it's 50. 50 is sold using different selling price, which is $40. But the rest, or the remaining amount, would be 1920 minus 50. It is equal to 1870. And then it said sold using different selling price, which is 60. Yeah, so your sales is 50 times $40 plus 1870 times 60 is equal to 114,200. That's the answer. It said that 4 marks, yeah? So this is 1 mark. This is 1 mark. 2 marks, sorry. This one is 1 mark. Next, calculate Alil's gross profit for the year ended 31st of December 2016. Gross profit, remember the formula to find gross profit is your sales must be minus with cost of sales. Now, we know that cost of sales is opening inventory plus purchases minus closing inventory. Yeah, so you already have your sales, which is in B's answer, 114,200 minus closing inventory is 100 times 24. Do you know the 24 is from the purchasing price that we have from number, where is it, here, 24, not 25, 24, this one, oops, yeah. This 24, yeah, this 24. Where is it? Well, okay lah. This 24, yeah? This ilal. So, next, 100 times 24 plus with purchases, which is 2,000 times 24, and then minus with closing inventory is 180 times 24. Yeah, so 114,200 minus the total of all of it would be 46,080. So it is equals to 68,120. That's the answer. Next, after you have this gross profit, next question is D. Elil provided the following additional informations about trade receivables on 1st of January. Remember, whenever it starts with number 1, it represents balance BD. During the year, you have a bad debts, and then also at the end, 31 December, it represents balance CD. You are required to calculate the amount of Elil received from his trade receivables during the year ended 31st of December in 2016. The key word for this is amount Elil received. We want to find bank information from SLCA. Yeah? Why we are talking about SLCA? Because we're talking about trade receivables, and trade receivables is SLCA, inside SLCA. So, if you still remember SLCA, if you don't remember, please open up my format for SLCA, find it, because I have gave it to you. I don't know when, but the point is I already gave it to you. SLCA. Since it is a trade receivable, so your balance BD would be over here, right? Balance BD is 7,900. Okay, and then remember of this part where I say number 5, sales on credit increase, it will increase the trade receivables as well. So in here, even though it is not stated there in these questions, but remember, it's still a continuous case. So sales on credit increasing trade receivables, and the sales is 114,200, right? Yeah. Next, in the credit side, if you look at the format of SLCA, you have a bank in the credit side. You have discount allowed also in credit side. You have sales return also in the credit side, but you don't need that. Yeah, because there's no because there's no discount allowed and sales return. Yeah, but you have bad debts, and bad debts in SLCA will be posted in the credit side. You have a bad debts of 200, and then you have a balance CD at the end, which is 9,100. Now, question mark for bank. How do you find your bank? Simple. The account debit and credit must be the same. So, total debit side would be is 100, and then 12, and then 2, 1, 2, 2, 100. 7,900 plus 114,200. Yeah. So that means in the credit side you have to have the same amount, which is 122,100. So how to find this bank? Simple. 122,100 minus 200 minus 9,100. So it is equals to 112,800. This is your answer. Yep. Next, state two reasons why the amount you calculated in D was not included in the income statement. First of all, we calculate bank information from SLCA. This bank information from SLCA represent payment from trade receivables. So, this is not an income or an expense. This is a simply payment of amount owing to the business, right? Since it is not represent sales, yeah, it is not sales, yeah, or not represent not represent sales during the year. So, because it is not represent sales during the year, so you cannot put it in the income statement. It's just a simply reduce in asset. Reduce in trade receivables is reduce in asset, right? TR is decrease because TR have paid you and your bank increase. So both of them are CA. So there's nothing to do with income. So it is not sales. It does not represent sales during the year. So it is not recorded in the income statement. And second, it is to apply matching principle. What is matching principle? Matching principle is to match all costs must be matched against income. Okay, to explain to you about matching principle, yeah, all costs must be matched with income. And why you have to match cost with income, but both of them are in the same period, yeah? Same period. Because to find profit, you have to reduce total income for the year minus with total expenses for the year. That is the meaning by cost match with income, yeah? So that we can find profit. That's matching. And all the income and cost must be in the same period. So if there is an accrued, there is a prepaid, you have to exclude it or include it in the calculation so that you will have the full amount of sales or full amount of expenses during the year. Then if they are matched the same period for the year, then you can decrease the expenses to the sales. Yeah. Next, LL considering making future payments to suppliers earlier in order to receive discount. Name the type of discount. We are talking about the type, not the name of the discount. The name of the discount is discount received, but the type of discount is cash discount. Okay? Discount divided into two, if you remember. Trade discount and cash discount. Cash discount. Trade discount happens before transaction. Cash discount is after transactions plus payment. I mean, it happens after transactions and when there is a payment. Cash discount divided into two, discount allowed and discount received. Yep. Now, you are required to name the type of discount. So the type of discount is cash discount because it is considered as discount received. Yeah. Next, complete the table below indicating with a tick the effect of receipts of the discount on each item. First of all, it's a discount received. Gross profit is no effect. Why? Because this is considered as other income. Other income shown after gross profit. Shown after GP. So, gross profit is not affected. Okay? But profit for the year, yes, it is increased because you got a discount received. So, another income. Other income increase, net profit increase. Next, working capital. Working capital, how to answer this? Working capital formula is CA minus CL. CA is current asset, CL is current liability. Now, let's illustrate that you have a debts to trade payables. Trade payables, you have a debts 400%. And then when you want to pay your trade receivables, you have a discount. You got the discount. Let's say the discount is 5%. Now, that means you only have to pay by 95%, right? Now, according to this, trade payable is CL. Discount received is income. Bank is CA. Okay? When there is a payment of trade receivable, your CA will be decreased. Income will increase because there is a discount received. Now, how about bank paid? Your bank paid is also decreased because reduced money, right? Now, in terms of CL decreased by 100%. Income increased by 5%. CA decreased by 95%. Now, if working capital is CA minus CL, your CA is decreased by 95. So I'm going to put decrease 95 and then minus your CL, negative 100. Open bracket 100. So minus 95 plus 100. It is equals to plus 5. So that means every time there is a discount received, your working capital is increased. Yeah.